Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, Wednesday morning, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning.
Hi, good morning. This morning, it's all about reading in between the lines. Do we have the new Fed chief announcement or not? What do you guys think?
Anyone's guess, but it looks like directionally. I think he's given the hint.
I mean, he said it.
Yeah.
In almost as many words.
What did he say? I think we'll play the soundbite in a bit. I think Hassett was in the room and he said, well, I think the next Fed chair is in the room. So I think, what else, right? But, that's Donald Trump for you. But, as always, let's start from the beginning in terms of what you need to know as we begin this new session. 20 days to go for the end of the year. I just want to sort of look at that and kind of somehow just feels that you're sort of finishing something and you're going to start something new as you begin this new year. But, seasonally, by the way, end of the year is a strong period for global markets, for equities, etc. So far it's not been, at least here in India. When we started, actually a couple of months earlier, and the mood started at least, what people were writing and the sell side view, etc. All of that changed about a month and a half back, but it's yet to reflect on the screen in any significant way as we roll into the end of the year. U.S. equities, they rallied overnight, and I dare say led by an 8% rebound in Bitcoin. It's like the tail wagging the dog. Basically, it's got, there was an 8% crash in Bitcoin, there's an 8% rebound, equities sold off and equities have rebounded. That's the short story. S&P about a 0.25% higher, NASDAQ 0.6%. And by the way, Bitcoin prices briefly topped $92,000 once again. They'd come down to about $83,000 at the lows that we saw in the last 48 hours. Now, Trump has signaled publicly that his longtime advisor, Kevin Hassett, will be the next Federal Reserve chairman. The Fed Chair Powell, current Chair Powell, essentially steps away and his term ends in May of 2026. Kevin Hassett, the agenda and what Trump has, of course, publicly demanded of the current Fed and, of course, the new Fed under Kevin Hassett is going to be lower rates. A lot more focus on inflation and lesser on labor markets. And I think, one mandate over the other. Will Kevin Hassett be able to swing this for President Trump is the question. As we've seen over the last 2 months now, it's not been so easy. People have voted both ways, depending on what data they've got and not got because of the shutdown, etc. Now, the 10-year yield was unchanged, 4.08%. Oil prices came off about 1%, but not going anywhere, 62.5 on Brent oil prices. There wasn't too much data last night, but tonight we've got data coming in from, we got US ADP, that's a private payrolls number, and you've got the ISM services data, which will come in as well. And we got the manufacturing numbers, which came out earlier. I just want to mention 2 or 3 stocks because they've been such outsized movers. So Boeing was up 10% last night after it said deliveries of 737 and 787 jets will rise in 2026. These are large stocks, and they moved in a pretty significant way. Intel was up 9%. Intel said they're investing $200 million to put up an installation and testing center in Malaysia. It's like an OSAT facility in Malaysia. Tesla fell. Michael Burry, the famous a big short investor, essentially calling the shares ridiculously overvalued. We will talk more about that one. Here in India, it's been slow, it's been grinding, and it's, of course, been sideways to lower. That's been the price action. The primary market remains hot. There are 2 issues opening. Both are pretty interesting. Meesho is the one which I think will garner a fair bit of interest. It's a near 5,500 crore IPO. They're looking for a market cap of about 50,000 plus crores. It's a mix of OFS and primary offering. And the other one is Aequs, which is a company in the defense aerospace field. And that, again, is I guess, going to be hotly bid for. It's a unique company, which we will talk more about a little later. Both companies, by the way, coming up in the next 2-3 hours here on CNBC-TV18 for a chat with the promoter and management. Now, I'll just tie in with the levels. The Nifty support stands at 25,924, which is the 20-day moving average. We, by the way, closed pretty, I think, 80, 90 points away from that level. And the Nifty Bank support is the 20-day moving average, which is 58,775. Again, with the fall yesterday, those gaps between the current last close and the 20-day has narrowed quite a bit. So that's the overall picture as we begin another session. GIFT Nifty, I think, is flattish, slightly lower, 22 points. Lower is the implied open. F&O stats, positioning, how's it looking? Nigel has walked across to the wall. Nigel, over to you.
Well, if you get that GIFT Nifty downtick of around 20-30 points odd and putting together yesterday's weekly expiry close, which normally you see a big move in the final hour of trade, I think the Nifty should bounce back. It should undo some of what we saw yesterday and add to that the negative close, negative opening that we're likely to see. So yesterday's downtick of around 140 points, and today if you get 20-50 points lower, maybe we see a bit of a recovery. And yesterday it clearly had expiry that played out in trade yesterday. But there were a couple of positives actually. One being that the Nifty was down, but after a while, the Nifty Next 50 actually outperformed. And you had the mid and the small cap indices as well that outperformed, though the Nifty was down 140 points. Portfolios haven't been feeling too good, and you like to see more of a broader market participation, though the Nifty is holding on to its ground. In terms of institutional flows, well, the FIs were sellers, the DIs were buyer, but net-net, the DIs were buyers to the tune of close to around 1,000 crores. Moving to the Nifty as well as the India VIX, that should come up for you on the screen because the Nifty ended lower, but the VIX as well was lower. That's normally a good sign from a bullish perspective. Not too much concern in the system, at least as of now. Well, in terms of what did the FIs do on index futures? They went ahead and they added some short positions, they unwound some long positionings, and now the total net short positioning is at around 1 lakh contracts from the FIs itself. And that was perfectly depicted, right? Because in yesterday's trade, you had some addition on the Nifty, so there were some mild shorts that got added out there. While on the Nifty Bank, there was some unwinding that we saw on this particular index. Moving to the options data then, the PCR, as we have mentioned, it's cooled off from the recent peak of around 1.5 because the call writers are getting very aggressive. 26,000 call, 26,200 call. Just take a look at the open interest addition on both those two strikes. While on the downside, this 26,000 put has seen a fair bit of open interest addition and the premium is around 90 rupees. So you plug in this 90 rupees and you look at the 20 DMA and you get that support zone. This 25,900 mark is the extremely important mark that you want to defend on the downside because that's where the 20 DMA is at. And in terms of a range, the upside range is at the recent high that we're looking at. The Nifty Bank, well, that's been pulling back for the last couple of days. I think it's pulled back close to around 800 points or thereabouts. But you want the 20 DMA to get defended, which is around 500 points away from current levels. And the Nifty Bank actually will have to lead the way. Another cue that we'll be tracking is the Indian rupee. That's been showing some sort of weakness. You want some stability on that front. Let it find its level and then stabilize around that mark. Because that makes things a little bit uncomfortable. On a macro perspective, you'll see our exports become more competitive, but you'll want some stability on the Indian rupee. That's something that traders will track as well.
Oh, absolutely. And we need to see if today is that 90 mark or if there's a bit of a cool off from these really heated levels for the dollar. By the way, do keep a track of the other development and the very important development in the AI space, the whole race for AI. Yesterday, Amazon, unveiled its latest chip. It's called the Trainium 3 chip, and it could take the fight straight to the heart of the incumbent, which is NVIDIA. They also put out a roadmap for the Trainium 4 chip. And these chips are promising AWS, Amazon Web Services, promises that they will have better compute capacity, they'll be cheaper. Very interesting developments over there. Yesterday, of course, most of these stocks were up and about, including Amazon and NVIDIA. Very quickly, let's actually play out the soundbite, which got everybody sitting up to take notice. And yes, I'm referring to what the US president has to say on the new Fed chair. Now, Mr. Trump has announced plans to reveal his choice for the Federal Reserve chairperson in early 2026. He hinted that National Economic Council Director Kevin Hassett as a potential candidate, calling him a respected person and signaling that Hassett could be in the running.
I want to thank you all for being here. It's a great group. And I guess a potential Fed chair is here, too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
He's a respected person. Does that mean he makes the cut? Well, it's still a cliffhanger. we will await the final announcement from the US president. By the way, this morning, Asian markets are slightly mixed in texture. You've got markets like Japan and South Korea, which are doing really well. Both are up. But then there's some profit taking in the Hong Kong market. Taiwan's holding higher. So fairly mixed. Now, where does this leave us? Let's quickly check the GIFT Nifty and the implied open, because the bulls have been slipping in the second half of the session, and that's become a bit of a trend last couple of days. The start is going to be fairly cautious. Remember, yesterday in the afternoon session, we actually slipped below the 26,000 mark as well. So we'll see how it plays out. Right now, a cautious opening is expected. Let's move on and welcome our first guest on the show. Herald van der Linde, Head of Asia Equity Strategy at HSBC, is with us. Herald, great to have you in. That's the real question that I think we've all been asking ourselves as well as most of our guests. So I'll start right there. Whether you think we will see more of a diversification away from the big US AI trade, US or China AI trade. If you see that happening, and if you do, then what could the implications be for India?
Well, actually, I'm quite positive on India in that regard. So I do think that we move away from the big AI trade. That doesn't mean that I don't believe that AI has come to an end. It is just that everybody has invested in it. And if you look at the positionings in some of these markets, to think about Taiwan and Korea, they are pretty heavy. Hynix is in Korea is now the second most overweight stock in Asian or emerging market portfolios globally. And TSMC, most Asian funds have about 10% of their portfolio in TSMC already. So I think the AI story can continue, but I think the way people have invested in it is that they're coming to how much more can you really buy? And that comes maybe at a time whereby people say, well, is there anything else then in Asia that they can look at? The China recovery this year in the China market has been really a domestic story. So foreigners could go there. But I think also we see now encouraging sort of data coming out of India. And my suspicion is that as we go into 2026, that foreign investors increasingly going to put India back onto their radar screens.
Harold, hi, morning. I hope that is true. And if they decide to do it, they're going to get to buy at an attractive dollar rupee rate, right? That's the silver lining of this sharp depreciation of the currency. Would you see it like that? And what's your view, if you have a view on the rupee itself?
No, I think this is absolutely right. If you look at the valuations of China, for example, or Korea, you can take it as well, versus India, India's stock market has come off in the last, say, 18 months. The other markets have rallied, and in US dollar terms, that's even more so the case. So India is clearly starting to offer good value as against some of the other markets in the region, which is why I think they come back. The dollar rate is very important, is very important here. And what might help India to a certain extent, India is in a cutting rates sort of mood, but the US has not. And this is one of the reasons why some of these currencies, including the Indian rupee, have been a little bit under pressure. But if the US is going to cut interest rates into 2026, or maybe this December, it would probably mean that, you don't see that much further weakness in this particular currency. So then you think about, from a foreign point of view, hey, maybe it's not too bad to go back into India and have that rupee exposure, and you can buy some of these stocks at pretty good valuations now.
All right. Hi, Harold. Good to see you in as always. And good to hear you're sounding far more optimistic about India post the recent underperformance. Harold, I wanted to ask you about the Fed chair, right? Since you briefly mentioned in terms of central bank action. Mr. Trump has stopped short of, saying that Kevin Hassett is the next central bank chief, the Fed chief. What is your view on it? I mean, initial reactions suggest that he is more bullish. I think he's leaning towards cryptocurrencies. He could be a little bit more dovish as well. Do you echo that sort of sentiment? And in that case, the dollar continues to weaken a little bit, which is good news for emerging markets like India.
Yeah, I think on cryptocurrency, it's very difficult to say anything. I mean, I look at the current crypto, it's actually come off quite a lot right over the last couple of weeks. It's an industry that eventually will need to be regulated or will go through some sort of regulation. So we'll see how that's going to work out. But more importantly is what is he going to do on the interest rate front. Now, if he were to be appointed, he comes in, of course, at a time when the Fed is cutting interest rates. It already done so, it's waited. The feeling now is that they go in December again. and maybe we'll see a little bit further into 2026. That in itself could well be warranted. We'll have to see how the data is going to work out. What we, of course, also have to be cognizant about is that if any Fed chair comes in but is too aggressive in cutting interest rates, and we saw this in the early 70s and the late 70s, it only spirals inflation at a later stage. And then, you'll find yourself mopping up all that excess liquidity at a later stage by raising interest rates again. And that happened very dramatically in the 1970s. So let's see what he's going to do. But at the moment, any Fed that comes in probably has some tailwinds behind him in terms of cuts have already taken place, and maybe still some of that needs to further take place, depending how the data comes out. But that's the direction.
Yeah, absolutely. Harold, 30 seconds, if you will, weigh in, right? The other story which is developing is, you look at the JGBs, right? The Japanese government bond yields, which are back at 2008 highs. The old question, people borrow in yen and then buy everything else, US stocks included. If the yen were to appreciate significantly, and first of all, do you think it will? By the way, what's the risk? Is the risk that the governor of Bank of Japan sounded a little hawkish, but did he sound hawkish, or the market feared that he did not sound hawkish enough, given where inflation picture, etc. is, and what the new prime minister is saying she wants to do? What's going on, briefly?
Yeah, very briefly. Japan is the only country that is really looking at raising interest rates around the world, as far as I can think. It's got to do, of course, with the labor market being very tight and these sort of things. We think they need to raise these rates. So I think this talk of him saying this is the direction we're going is probably good. We think they've probably been on hold for a little bit too long. But a stronger yen is not so good for the equity markets. And you saw this earlier this week. The Japanese equity market initially coming a little bit under pressure because it's mostly exporters there. And a stronger yen, that doesn't really work. So you have the yen rates going up just when the US dollar rates are coming down. That might not be over.
But Herald, does it really impact global markets to that extent? Back in the day, yen carried trade was the big global trade. But a lot of that started getting unwound as well over the course of the last 2-3 years. So if the yen keeps appreciating and if Japanese bond yields keep appreciating as Japan hikes rates, does it really mean volatility? What does it mean for rest of the world equities?
It could mean that within Asia, you see a redirection of flows. A lot of money has gone into actually has been repatriated over time. The Japanese savers, but also the Korean savers, are really important sort of forces of investments in the region. So it could be having major implications in that regard.
Okay.
For them, if the stock market comes off, they might be wanting to look somewhere else.
Okay, so another watch point as we enter 2026, not just who's the next Fed chief, but as usual, the ongoings in Japan have a big bearing on global markets as well. Thank you so much, Herald, for joining in.
The lady in Japan has shaken things up. Right?
Oh, yeah.
The new Prime Minister, picking a fight with China, wants to spend her way out of a lot of the sluggish economy, and so lots of changes. Although there was this article which said that Trump has called her and said, "Well, pipe down, don't pick up a fight with China." So
you can say I'm taking a leaf out of your book, so I like to keep it interesting.
Harold, thanks very much. Great speaking with you. Appreciate it, and good speaking on CNBC-TV18. Let me just quickly run you through what the interactions are here over the next 2.5 hours. So the Misho management will be joining us in just a bit. So 8:35, you'll hear from them. So we have Vidit Atre and Dhiresh Bansal of Misho. So quite a bit of interest there. 9 o'clock, we get you a special conversation with Asian Paint CEO Amit Single in a brand new edition of CEO Centimeter. 9:20, Kotak Institutional Equities is Pratik Gupta. Does he still believe markets are in a bit of a liquid oxygen state? 9:35, Bajaj Auto joins us, post reporting an inline November sales number. Management of Blue Star speaks with us at 9:45 to talk about their outlook for the second half. And it's the economy at 10:15. Lata in conversation on the falling rupee and soaring GDP. And, what's the interplay? She's going to be speaking with former MPC member Ashima Goyal and Neeraj Gambhir of Axis Bank.
All right, time to slip into a short break. But when you come back, we'll be focusing on our top 10 stocks that we're going to be tracking for you. Stay tuned.
Welcome back. So as we've been telling you, cues are sort of flat across global markets. We didn't have a very big directional move on Wall Street overnight. Markets put on small gains here and there. And the Asian picture is mixed right now. You've got Hong Kong, which is selling off a little bit. China is down a little bit. But then other markets like Japan, South Korea, all of them are up and about. Where does it leave us in terms of the implied open right now? Last time we checked, GIFT Nifty was indicating a start which is about 20 points lower. Yeah, so 23 points lower. Cautious start is what we seem to be in for. Now let's focus on the stocks that should be on our radar, and our team is standing by with a list of top stocks to watch. Guys, morning to all of you. Let's start with Sudarshan. What's on your radar, sir?
So I'm tracking Maruti. For Maruti, it's a time for E for me. That's the name that the company has given for its app for EV ecosystem. They have made two announcements. First, they have unveiled electric vehicle, that is e-Vitara. And second, they have launched EV ecosystem. So first, talk about e-Vitara. So now they are yet to announce the prices, but bookings are expected to start the next month. And the range for this car would be 543 kilometers. Now talking about the EV ecosystem, company has signed agreements with 13 charging point operators and aggregators, and they have established 2,000 charging stations. Target is to increase to more than 1 lakh by 2030, and also they're planning to have charging stations at the distance of 5 to 10 kilometers in top 100 cities by 2030. So overall, after a strong set of numbers, company reported for the month of November, and this is the positive development. I'm going with green.
Okay, all right. Thanks a lot for that, Sir. Well, let's hop across to Upasana. She's here to tell us about some stocks that are in the news. Morning, Upasana.
Good morning, Nigel. First up, let me start with Bank of Maharashtra. Now, bank to exercise green shoe option for the OFS. Mind you that the government is selling up to 6% stake via OFS, including 1% green shoe option. Now, non-retail portion of the entire OFS gets subscribed more than 3x times. Hence, this stock will remain in focus today. Now, PSU banks also in focus as Finance Minister responds to a query related to increasing FDI in PSU banks to 49%, to which the Finance Minister has clarified that no such proposal is approved. Next up is Oil India. FM approves upgradation of Numaligarh refinery to Navratna status, and with this it becomes 27 Navratna amongst the various other CPSEs. Canara Bank will also be in focus as company raises fund worth 3,500 via Basel III compliant Tier 1 bonds, and it includes base size of 1,000 crores and green shoe option of 2,500 crore. And lastly, coming to APJ Surendra Park Hotels, company has executed a lease deed here with Katzen Hotels for taking a lease of a fully furnished and operational hotel property known as Casa di Katzen in Goa, which includes 42 rooms, and the lease period is nearly about 12 years is what the company has indicated. So all in all, we'll be looking out for all these stocks in today's trading session.
Okay, all right. Thank you for that, Upasana. Back to Sud then. He's also watching out for a few other names beyond Maruti. Which ones are these, Sudarshan?
So I'm tracking Angel One and Rally. So first about Angel One, I'm going with red because the company has given the updates for the month of November, and except client base, all the other metrics have seen a decline both on a monthly basis as well as YOY. So gross client acquisition is down 11% month on month and down 16% YOY. Client base though has increased by almost 2% month on month and has increased by almost 22% YOY. Even number of orders has fallen 12% month on month and it's down almost 10.4% YOY. Even average daily orders have seen a fall of 8% month on month and down 15% month on month. Talking about rallies, Ask Investment Managers has bought more than 11 lakh shares, and that was done via block days, and price for the same was rupees 266.70 per share.
All right. So thanks very much for that. Well, some positive news flow as far as Sun Pharma, Dr. Reddy's, maybe even companies like OneSource, etc. Ekta is here with what's happened. Ekta, morning. Winnie is going to take us through what's happened here in terms of developments. Winnie, take it away.
Yes, so in terms of Sun Pharma, obviously they've announced a 3,000 crore investment that is going to be mainly a greenfield project for formulation facility that they will be setting up in Madhya Pradesh. So increase in terms of the formulation side is a positive that comes in for Sun Pharma. Now, Dr. Reddy's OneSource, we'll keep an eye out on that. Why? Because the Delhi High Court has allowed manufacturing of diabetes as well as anti-obesity drugs, that's a semaglutide in India, and to export it as well. Now, do not forget that this came in. Why? because Novo Nordisk had actually said previously and had filed a complaint with the High Court saying that they should not allow other companies to sell these drugs here. Now, obviously, Delhi High Court has allowed this. So, from March 2026 and onwards, once the expiry comes in for Novo Nordisk drugs on this front, there will be sales that will come in for Sun Pharma and, beg your pardon, Dr. Reddy's, as well as OneSource. That will also be in focus on the back of this.
Okay, so there's some respite coming in after March 26. Thanks to that Delhi High Court order. Got it. Vinny, thank you so much for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them this morning would be Maruti, Bank of Maharashtra, Oil India, Canara Bank, APJ Surendra Park Hotels, Sun Pharma and Dr. Reddy's Laboratories. Stocks with negative news flow would be PSU Banks, Angel One and Rallis India. Okay, let's figure out what's happening in the world of commodities. Manisha is joining in with a roundup. Before we get to commodities, Manisha, crypto dancing away. Yesterday was swinging to the other side. I think some 6-7% up on the Bitcoin, right?
Oh, yes. It's a new story every single day. Yeah. But, that really tells you with all the markets actually are now slightly downplaying the Japanese threat and is the reason you've seen all of them come back. So it's not just about crypto, but you've seen some of those equities do well as well. So it seems to be moving in tandem. And we've really done and realized as well that crypto and the S&P 500 or NASDAQ in that sense correlates or moves together in tandem most of the times, which is 48 to 52%. So that's exactly what seems to be happening at this point in time as well. But commodities then, and well, we have seen a bit of a profit taking happen in case of gold and silver prices, still trading on the higher side of the range because the markets are working with an 88% probability of a 25 basis point rate cut in the Fed December meeting. Having said that, you also have seen the US dollar index regain ground versus Japanese yen. The US 10-year Treasury yields are trading at a 2-week highs, is the reason you've seen this pause come in for the precious metal prices. But what is doing very well today is the ferrous metals. After underperforming most of this year, we are looking at steel now trading at a 3-month highs. Iron ore prices in China are at a 1-month highs. This is after Chinese government has said that they will impose new measures to support property market. There has been a conversation about lowering taxes on home buying, mortgage subsidies, and that is something that the markets absolutely like and is supporting the metal prices.
Okay, all right, Manisha. Thanks a lot for joining in, giving us that quick update. Well, for the time being, we slip in a short break. On the other side, we have the management of Meesho, who will be waiting by to talk about their issue, which opens up today. Stay tuned.
Welcome back. 25 minutes to go for the pre-open session to kick off. 20 points lower is what we have right now. Now, e-commerce platform Meesho's 5,421 crore IPO opens today. We have the management joining us, but we want to set this up with what Meesho does, a little bit about how it's different in terms of how it makes its money compared to other platforms and more. Mangalam is standing by with the details. Mangalam, over to you.
That's right. So the IPO opens today. It's a 5,400 crore IPO, of which fresh issue is close to 4,250 crores. And at the upper end of the price band, the company is actually seeking a valuation of almost 50,096 crores or 50,100 crores. And there had been a strong demand from the anchor investors as well. Yesterday, they raised about 2,400 crores from the anchor investors. The book was subscribed 32 times. So 80,000 crore worth bids coming in from the anchor investors. And SBI Mutual Fund was the key out there, which picked up 25% of the allotted stake for anchor investors. The others were GIC, BlackRock, Fidelity, and the others. Now, Meesho is obviously India's largest e-commerce platform. And the moat is that they do not charge sellers any commission or platform fees to consumers. How is it that they make money? They monetize their platform via services to sellers such as fulfillment, which is logistics, advertising, and data insights. The important part, it's a pure Bharat app where 87% of its transacting users actually come from outside of top 8 cities. And in the first half of this year itself, they had around 234 million transacting users. That's about 23 crore or 1 in 6 Indians. The opportunity, India has nearly 700 million smartphone users and online shoppers are just around 250 to 270 million. So that's the headroom out there. As far as their financials are concerned, last year they did about 10,000 crores on the top line, but on a reported basis, they are still loss-making on EBITDA as well as the net loss. The first half of this year as well, the adjusted EBITDA loss was close to around 700 crores, and the net loss was also 700 crores on a 5,600 crore top line. The company looks at free cash flow as a growth metric, profitable metric for them, and their contribution margins are 3.8% for the first half of this year versus 4.9% last year. For all of this, what are they valued at? Now, because it's a loss-making company on a reported basis on EBITDA and net profit, we're looking at price to sales. It's much lower than Eternal, Lenskart and Trend. But remember, the profitability is nowhere close to the others as well. At around 5.3, pegged closer to Avenue Supermarts, with the news that their profitability is not very close to Avenue Supermarts or the others that we're talking about right now. So what we need to know from here on is the growth path and the path to profitability for the company. They've been talking about growing at free cash flow level and at the same time looking at increased share of revenue coming in from advertising. That would be a margin lever for them.
Absolutely. And thanks very much, Mangalam. Really sets the ground for us to quiz the management. We have Vidit Atre, CMD and CEO at Meesho. We also have Dhiresh Bansal, Chief Financial Officer at Meesho. Gentlemen, great to have both of you here. Thanks very much for joining us. Prashant this side. Vidit, before we get into asking you about the path to profitability, and I think that's what's relevant for our investors, but I just want to tackle one issue which Bloomberg put out a story yesterday. Essentially, and it's a good problem to have. Too many people want your stock in the anchor book. Not everybody could grab or get their hands on what they wanted. And apparently, a bunch of funds like Capital Group, Aberdeen, etc. stayed away. I know it's not your fault. I mean, I think it's people who are managing the issue and bankers, etc. But just a quick. I don't know if you have any thoughts at all with it.
Yeah. First of all, thanks, Prashant, for having us here. So I think, as you said, there was a lot of demand for our stock, and not just in India but outside of India as well. I think people have seen very similar stories in many other geographies in China, Southeast Asia, Latin America. So there's a lot of excitement about Meesho, I think, everywhere. And as you said, like, not everyone could kind of get the kind of allocation they wanted. And most of this was kind of handled by the bankers. So I don't have much to say over that point. I would also say that, like, our goal is to have the right long-term shareholders. So some of them who could not kind of come now, we'll keep engaging with these investors even in the future and make sure at the right time they come into the company and basically capture value over the long run.
Okay, fair enough. And we'll try and get the bankers on as well. It's an important issue away from, of course, the Meesho IPO, which we are focused on now. With it, as Mangalam said, I mean, key to understand, of course, now is how you're thinking about being sort of consistently profitable. And path to profitability. Just give us the outline of your thinking there. And I know that we won't be able to push you to get some numbers out. Maybe we'll do that on the day of the listing. But give us a sense of how you're thinking about this question.
Yeah, I think we've been very consistent about this. We, as a company, look at free cash flow as the right bottom line metric. Any company textbook definition of valuation is the net present value of all your future cash flows. And as a company, we've been the most capital efficient asset light company, right? Like, to kind of reach a lot of milestones in our business, we've actually spent the least amount of money as compared to many other e-commerce companies in India. And we take pride in that. We continue to kind of optimize for free cash flow. If you look at the last 2 financial years, we have been positive on free cash flow. For the last financial year 25, we generated almost 1,000 crores of cash. And even forward, I think we will continue to kind of keep looking at that while doing capital allocation within the company. I think as the business keeps growing, all the other accounting metrics around bottom line will obviously keep getting better. But we take a very long-term view to this problem. If the business is generating cash consistently, getting bigger and bigger, there's no chance that the shareholders get diluted again. We create more value for the investors in the long run. So we believe that's the right way to think about this.
No, absolutely. No taking away from that at all with it. Free cash flow is always a very promising sign for public market investors. But we want to understand the way you're thinking about the path to profitability a little more. Maybe Dhiresh can weigh in on this as well. Dhiresh, so out of the money that's coming into the company, a fair amount is going to be spent on building up your tech. It will be tech systems. It's tech talent as well. I think over 400 crores is going to be allocated towards these brilliant tech brains that you want to have on board or already have on board. And I think about 1,000 odd crores, 1,020 is going to marketing and brand building, but almost 1,400 crores is going into cloud infrastructure. So my question really is, for how long will you be in the build-out stage? And how much will the spends on tech be? Because tech is very, very intrinsic to the platform, time to delivery, the way the algorithms work, pricing and so on and so forth. So just give us some idea of how much spends on tech. And then therefore, what is the roadmap to profitability? Because while the free cash flow generation is there that Vidit spoke about, this cash is going to be constantly deployed into the business as well. So we need to just understand some of those details.
Sure. No, thank you for that question. And like you said, we are a technology platform. Most of our investments actually go into building out this technology. Actually, all of these investments that we make are expensed out in our P&L already. So it is not that we are capitalizing these expenses or they're going into the balance sheet. When you look at the net profitability metrics or EBITDA metrics, it captures the server cost that we spend, for instance, the people cost that we have on technology, all of those are captured in our P&L. So there is no capitalization of those expenses which is happening. If you look at the use of proceeds, we are raising these for the next 3 years. I think that is our estimate of what is the spend going to be in some of these headers for the next 3 years. And if you look at the historical trends, as we have grown consistently, some of our fixed cost base, such as our server infrastructure and other kind of fixed cost line items, including employee cost as well, have not grown at the same path or at the same pace as our overall top line growth has been. So operating leverage is a key metric that we would kind of keep tracking. Our fixed cost base, let's say historically, the server cost grew by only 4.5% when we grew at about 35%. And we'll keep maintaining that going forward as well.
So Dhiresh, this spend of about, I think 90 crores is the exact spend on, your cloud, etc. And about 400 odd crores is the spend on people, specifically the engineers who are enabling this kind of, tech adoption. These are spends for how many years? I'm just trying to arrive at, if we look at the EBITDA level, the first half loss is about 700 crores right now. So you keep investing this money for what, 2-3 years? And then would it be fair to extrapolate that at least for the next 3 years, investors may still have to look at losses at an EBITDA level?
So the 700 crores, I think the number is slightly different. It's, I think, closer to 500 crores of...
Adjusted EBITDA is closer to 500 crores, correct?
Yes.
So we can talk adjusted EBITDA, fair enough.
That already includes these expenses of server cost, of the people cost that we have for this period. I think the estimate that we have, which is in part of the use of proceeds, is for the next 3 years. So the 1,390 plus the 480 crores of technology-related expense that you see are part of already our adjusted EBITDA for the current period. And for the next 3 years, we are saying that this is the spend, not in addition to the current adjusted EBITDA, but as part of the adjusted EBITDA that we have, the trajectory that we forecast for the next 3 years.
Okay, all right. Hi, Vidit and Dhiresh, and good to have you all on the show. Welcome to the stock market, and hopefully we'll be chatting more often from here on. Well, let's focus on the growth prospect. All that adjustments and all, let's keep it aside. When your list, we'll push you a little bit more. But let's focus on growth. So tell us, what will be the key growth drivers going forward? Will it be led by monthly transacting users expansion? Or will it be led by high order frequency? If you could give us some clarity on that front. And if you look at your core business, order growth has been good, but the AOV has declined. And you're expanding in new categories as well. So what's the steady state AOV you're looking at? Will it decline further or will it hold around these levels?
So if you look at... Go on, Dhiresh.
Yeah. So I think if you look at the growth composition for the last 3 years, we have been consistently accelerating our NMV growth, which takes into account both our user growth as well as frequency growth in the business.
Okay.
If you look at our annual transacting user base, that increased from about 14% growth rate in FY24 to about 28% growth in FY25. And even in the first half of this year, as we crossed 23 crore annual transacting users, we grew even faster at about 35% growth year on year. even in terms of frequency, our growth has been consistently there. The frequency used to be about 7.5 times 2 years ago, which is now inching closer to 10 times.
Okay.
So I think as we go deeper and deeper into India, we'll keep expanding the number of users who transact with us. And as our proposition becomes more affordable with the efficiencies that we are bringing in, the frequency of the users also continues to grow on the platform. And that will be the growth formula for the next few years to come. India is still very low when it comes to e-commerce adoption versus even other emerging markets. And a big way to kind of drive that adoption going forward is going to be affordability led, where we are kind of leading the path.
All right. And AOV, you want to give us an outlook out there?
Yeah, so I think AOV might decline. We don't have a sense of kind of gauging that right away, but it'll come with more and more frequency unlocks. So overall, from a GMV and an MV perspective, that is actually a beneficial thing to have, because that means that people are transacting in a lot many more price points than they were before.
Okay. With a very small last question to you. Sorry, I'm going to come back to that path to profitability question. So Dhiresh made it very, very clear that the investments in tech and people, all that's coming through the IPO proceeds, right? So next 3 years, you're absolutely fine. You're saying your operating cash flow has been getting better. Give us a sense of how much. And will it be better enough to take care of the adjusted EBITDA losses over what, 2 years, 3 years? Just trying to make sense of how this improving operating cash flow will plow back into profitability. Even a rough range in terms of how you're expecting it to grow, that would help.
Yes, I think before I even come to the calculation around cash flow, today we have two streams of revenue. One is around logistics and the second is around advertising. And by the way, both of these metrics, if you look at global e-commerce companies, tend to go non-linearly as the platform gets larger and larger. So the opportunity there is still quite large as we continue to expand our own logistics platform, keep growing our volumes. We have a large opportunity to kind of make more revenue there. Advertising, we see our sellers, as we have more sellers on a platform, there is more competition and willingness for sellers to kind of use our ad products to get more visibility on the platform gets higher and higher. So both of these revenue streams will kind of see like exponential growth over the next coming years. Again, we cannot share projections. Now, even after this, we are adding new revenue streams to our business. So for example, we have an option of making money in a content commerce platform. Today, we are very, very focused on growth, so not capturing any take rate there. But our sellers basically take advantage of the influencer network and grow their business. There is an opportunity to make money there. We are recently starting our own financial services platform. That is a large opportunity. If you see some of the largest value commerce platforms in China, Southeast Asia, Latin America,
right
now they make a lot of like bottom line from financial services. So I think we're also investing in new revenue streams. So again, just in terms of growing revenue, there's a lot of potential there, and all of that should flow into bottom line because all of these are very high margin revenue streams. And I think in terms of cash flow, as you see, like for the last 2 years, we've been improving consistently our bottom line around EBITDA, but we have been positive on free cash flow. So I think that will continue to be even going forward. I don't expect that to kind of change.
Got it. More questions when you list, but you've got a large captive user base and you can sort of provide many more things in terms of those revenue streams you spoke about. Good luck to you guys and the team at Meesho as you come to the markets. Vidit and Dhiresh, thanks for joining us here this morning on CNBC-TV18. Appreciate it.
Thank you.
Okay, well, we'll take a quick commercial break here. We're going to come back. We connect with Devin Chokshi. We talk some stocks, some markets. 11 minutes to go for the pre-open session. That's coming up.
Welcome back. You're tuned in to Bazaar Morning Call. As promised, let's get in our fundamental expert. We have Devin Chokshi, Managing Director at DR Chokshi FinServ, who joins us on the show. Hi, Devin. Good morning. Good to see you, Ben. Another IPO hits the markets today. Meesho, any view on this one? Valuation-wise, debatable whether it's expensive or not, depending from which angle you're looking at it. But we just heard the management. So what would your view be?
Yeah, Nigel, good morning. Well, I think unable to understand the kind of value and the valuation that is being asked for on a 50,000 crore plus market cap with around 9,000, 10,000 crore kind of a top line and 4,000 crore of EBITDA of last year, EBITDA loss of last year. I think the equations are not gelling well to me. Yes, do you agree that there is a huge scope for the entire space as a whole and different verticals that they talked about, including financing verticals that they have brought in? I would think that yes, they will have relatively better opportunity going forward. But the kind of numbers that they have to produce to justify this market cap would be quite steep, quite tall. I'm not too sure whether I think one should immediately give this kind of a valuation to this company. So we'll probably stay away for the time.
Stay away from Misho. Okay, got that, Devin. Let's talk about some old economy businesses like auto, Maruti. Now, Maruti, let's pull up the one-year performance on the stock. I mean, what a year it's been for the Maruti stock, right? 50% higher. And a lot of those gains came in after the GST cuts were announced. But the question is, what next from here, Devin? Can someone still buy Maruti? Should you buy Maruti? Now they're announcing their EV platform. The e-Vitara is launching. Do you think it will move the needle further?
Yes, sir. Very good morning. Well, I believe that it should. Given the fact that as a family of four today, suppose if you are earning a 50 lakh rupee worth of income, with 10 lakh rupees income, I think exempted from the income tax, I think you are having virtually tax-free income in your hand. And that's a purchasing power that we are talking about for any discretionary spending they could have. Along with that, the interest costs expected to remain low. And that is where probably I think higher amount of EMI-based purchases would start emerging. So in my viewpoint, I think the auto sector per se should remain in a quite a strong hold, right? I think from the current levels as well. Even if we count around 10% nominal GDP, I think auto should be, clocking it around 15% kind of a growth overall, as I see the sector. And the leaders like Maruti, with the launch of new vehicles, definitely attracts more customers. In my viewpoint, yes, I think as a structural move on the subject, I think the industry as a whole, we feel that I think the situation looks quite conducive. Maybe Maruti has had its role, I think, in the recent past as well. Some cooling off may be justified, I think, given the kind of situation in which we are in the market. But I think that correction would be a buy opportunity, as I see it. Likes of Maruti, likes of Tata Motors, even Mahindra & Mahindra. Good stocks, I think, I believe in.
Okay. All right. Devin, just stay on. We'll have more questions for you in a bit. Need to take a very quick break. We'll come back. We'll have the pre-opening rates, and also we'll get you today's trading setup with Sudarshan and Mitesh.
Okay, well, 14 minutes to go for the market open, which is going to come up in just a bit from now. And look at the pre-open rates, which are coming up. Should not be 200 lower. I think it'll settle in just a bit from now, as it always does. Sudarshan is with us, so is Mitesh, with what they'd want you to do as far as specific trades go and index and stock views. Gentlemen, great to have both of you here. Thanks very much for joining us. Mitesh, you go first. What's the view and what's the trade? Yesterday, of course, market ended, 70, 80 points away from the 20-day.
Yeah. Morning, Prashant. So I think, a couple of observations. One is that, again, we have kind of tapered off, failed to get past 26,300. And therefore, now that will be taken as a pivot in the short term. And a failure to get past 26,300, which is also very close to the earlier all-time highs, means that some consolidation is required. So most likely, to my understanding, I think it could be a range of around 850, 880 on the downside, to about 26,300 broadly on the upside. And therefore, I think the next buying should be attempted around or just below 25,900. That's the view on the index, the Nifty. Similarly, for the Bank Nifty, I think, it's given a minor signs of profit booking on the hourly and 2 hourly charts. Therefore, some kind of pullback to about 58,800 is what I'm expecting. So in the short term, I think the markets will be slightly choppy, but broadly ranged.
Okay, all right. Got that, Mitesh. Coming to you for your stock calls. By the way, the rupee has hit the 90 mark. That was the mark that it was flirting around with in the last few days. And now it's gone ahead and it's breached that crucial 90 mark or thereabouts. Let's see whether or not there is some kind of support that comes in there to protect it from, drifting away further. Because the last few days it moved very, very swiftly from around that 88.5 closer to around that 90 odd mark. And as we speak, that's got breached. We'll wait by to see whether or not there is some intervention that comes in there to stabilize the rupee. But as of now, that's the big headline that's coming in there. Rupee moving to around that 90 odd mark. Very, very close yesterday. Today, it's breached that mark. We'll try to get you a couple of reactions. But for starters, the rupee is at a fresh all-time low. Well, going back to Mitesh. Mitesh, run us through your stock calls.
Yesterday, Nigel, we had 3 sells to a buy. Today, I think the ratio is even 2 sells to buys. Cyient was a call yesterday as well. It's still looking good to me. Now can be bought afresh with a stop at 11.55 for targets of 12.25. And the other buy call is on Siemens, which I would recommend buying with a stop at 33.20 or just below it for targets of 34.40. On the sell side is LIC with a stop at 900 for targets of 8.50. And Dabur, I think, is a sell with a stop at 5 3/2 for a target of around 4.95.
Okay, all right. Sudarshan, your stocks, specific trades?
Let me talk about the Nifty first.
Yes, please.
Okay. See, yesterday was a disappointment. The Nifty breached that significant support level of 26,100 where our exits were placed for the long positions. And that means that the market trend is now unknown or choppy. So as far as the Nifty is concerned, there is no trade till new patterns emerge. We just have to leave it aside. For stocks also, suddenly there is a mix of buys and sells. Exide is a buy with a stop under 370. JSW Energy is an intraday short with a stop above 495. ITC is an intraday short with a stop above 406. And Union Bank is a buying opportunity with a stop under 150. So the Nifty is an avoid and stocks are a mix.
Okay. Gentlemen, thank you both for joining us with that. We want to focus on the rupee as well in just a bit. And we have someone joining us to comment. I mean, last 3 days, the pattern has been clear. The market, the rupee makes newer lows and then intraday it kind of pulls back a little bit. And I think what is today also something similar has happened. Abhishek Goenka is with us, founder and CEO at IFA Global. Abhishek, good to have you with us here. Good morning. So, what are you seeing on the screen? I mean, if you're watching what's happening, and what should we expect from here, Abhishek?
Hi. So, of course, we all know that the rupee is weakening because we don't have any clarity from the trade deal. And I think this point of time, that is the main thing which is driving the rupee. I don't think that only because of a poor trade deficit numbers which has come recently because of gold imports, this is happening. I think also Putin is going to visit India. And I think there could be some trade deal announcement post that. And I think everybody is watching on India's stance on importing crude.
Abhishek, we know the reasons, but my question was more about what you're seeing on the screen now and whether people will be emboldened to short rupee from here with the assumption that the RBI is not going to defend it beyond a point. Anandya Banerjee is also with us, and we also have Dheeraj Nim, who's with ANZ Research. Anandya, of course, is with Kotak. Anandya, welcome back. Come in with a quick comment. My question is more immediate. With 90 gone, is 90 something which, you're past 90 now. So what from here? You think this continued depreciation will be the case from here on, or will the RBI step in a more aggressive way, which they've not done so far?
Right. Very good morning. Thank you for having me. Yes, 90 is a very important psychologically. As I said yesterday, what happens is a lot of these option traders, especially in the offshore, they watch these large handles, 80, 90. So today is, right now is the day when the RBI is supposed to come in aggressively. Because if it closes above or it's trying to sustain above 90, we could see a more speculative move. Because, see, when speculators get in, they become emboldened. It creates a fundamental of its own. It's very then hard to put a macro perspective to it. Right now, it's pure speculative move, which is happening.
Absolutely,
And,
Anindya. In fact, I remember you said exactly the same, that if 90 goes, then we need to watch for 91 perhaps,
Yeah.
if the speculators are not checked. And that's what we need to watch, whether the RBI comes in and stops excessive speculation. Usually when interventions happen, and this has been a bit of a free fall on the currency, 5% in a matter of weeks, you'd expect it at what time of the day, Anindya?
Generally, they come in before the fix, and the fix is around the noon. So that's when they come in. But I think with 90 gone now and it's trying to push higher, we could see the intervention soon, a heavy one. It has to be quite a heavy one.
Anindya, can I ask you, now at this rate, to push the rupee back, is there any, how much do you need to spend to move to push the currency pair back? Any broad number calculation? Any way to think about this question?
Generally, in the past, when RBI had tried to push it down by a rupee or more down, so let's say if they want to push it down to 89, then generally the interventions has been as high as $2 to $3 billion. But they have the option of using both the spot as well as the forward. They can even use the NDF. But the spot intervention is always the most effective because it creates a bigger panic with the speculators.
But does the cost keep going up? If you let it move like this?
Yes, because more speculators will join the party.
Yeah.
And then it creates a self-fulfilling trend. So that's why the RBI tends to break such things. Because if you look at the RBI data, that itself has shown that how their intervention, or rather the gross activity, has gone down, the buy and sell over the last 6-7 months. But this is the time when they have to intervene and try to check the volatility.
So, by the way, the first couple of trades were interesting because after hitting 90, the rupee, I think, straight away went to 90.14. That's been the low. And then it has pulled back a bit from there. And we need to see how it happens. And as Anindya is saying, the intervention might happen earlier, much before noon this time around. Dheeraj Nim is also with us. Dheeraj, what would your immediate expectations be? Would you expect heavy intervention? Of what nature? What magnitude? And give us a sense of, if you're looking at current positions, give us a sense of the rupee shorts and the dollar longs in the system as well.
So look, I think, of course, 90 is an important psychological level. And once it's broken, I agree that there could be some speculative interest that could come into the market. This is an RBI that, one, does not like speculation very much, and second, has been preventing an overshooting of the exchange rate despite the adjustments it's allowed. So I think that pattern is going to remain. They will not allow a runaway depreciation from the current level, so to speak, over a few sessions. But I do believe that over at least the next few months, until we have a clarity on trade deal, the rupee should remain on a modest depreciation path. Now, in terms of, how the flows are happening, look, we are seeing at the current levels because expectations have moved in a one-sided manner. There's a significant amount of importer hedging interest, and rightly so, because the expectations are going for a weaker rupee in the months to come. So I would imagine that, at the moment, from an economic configuration perspective, a weaker rupee is an adjustment that we require for the economy. And I don't want to overplay the script as in it's not really a bad thing that's happening for the exchange rate, but something good perhaps for the economy. So I think the RBI will control it. But of course, the recent action shows that they're open to further rupee weakness.
So adjusting to fundamentals in that sense, but where will that now level be, in your opinion? Not where it'll finally settle, but what you think is the fair level given, the current account deficit, low capital inflows, etc.
Look, we have rupee going up to 91.5 by the end of 2026. The risk is that it could be there sooner, but our view is also juxtaposed to our dollar view, which is that we expect the dollar would weaken by about 4 to 5% over 2026. So you can imagine the latitude along which we're expecting the rupee to depreciate.
Anindya, same question to you.
Yeah, see, currently the Indian rupee appears quite undervalued at this point in time. But again, when there is a speculative move, the market can stretch further. Because with the macroeconomic stability and the low inflation, yes, there is scope for the rupee to depreciate and stimulate the economy from the external sector without hurting consumption. But I think a point will come when somebody taking a 12 to 18 month view on the Indian assets as well as the Indian rupee will find it quite compelling to go long on the rupee. It might sound very crazy at this point in time to say that, but I think the rupee is getting quite undervalued.
Okay, just very quick, last 30 seconds to Dheeraj, to you. I mean, that point on exporters benefiting is very well taken, but the risks of a very rapid move to beyond 90, what would the prime risk be? I mean, obviously, from a flows perspective, it's not been a great year. And then we're looking at a current account deficit situation as well.
Right. So I think from an economic data perspective, it's important to watch how growth evolves from here on. So any incremental data on growth which seems to suggest that we are losing ground could be problematic. We are also heading into the budget. Look, we have been fiscally comfortable the last few years. So any news flow that could perhaps indicate fiscal stress, and I think that's the risk that we are running with currently, could also be a problem for flows further. Current account deficit, yes, I mean, it's on the course to widen, but the broader expectation is that it will remain contained and manageable, so to speak. And if there's any news flow that suggests that that's not the case, that could also be a problem. So look, at this moment, market would be watching all economic data, all news flows very, very closely to understand what pace of rupee depreciation can the RBI tolerate. But that said, they have enough firepower to restrain the moves.
Got it. Gentlemen, thanks very much, all of you, Dheeraj, Anandya and Abhishek, for joining us. Let's get the 9-10 calls out of the way. Sudarshan, what do you have?
It's JSW Energy, intraday short with a stop above 495.
Okay, Mitesh?
Buy on Cyient on the long side.
Okay, JSW and Cyient are the two calls coming through at this point in time. Just want to take a quick look at the stocks which are coming up and how they're settled in the pre-open raid, the pre-open session. Will we have time to get a quick brokerage corner with Sudarshan as well? We'll try and do that. But for now, it's on your screen. Maruti, Bank of Maharashtra, Oil India, there's Canara Bank, you've got Sun Pharma, Dr. Reddy's. One Source is something you should pay attention to. PSU Banks is another pack. Angel One, Rallis India, etc. Sur is here now with what are the brokers saying in terms of calls this morning. Sur, over to you.
So Citi has written on Indus Towers mainly after Telecom Minister's statement regarding the relief package that is expected the month and believes that for Indus Towers it's a compelling buying opportunity and maintains high conviction buy with a target price of 500 per share. And Citi also has written on Reliance Industries. It has maintained buy call target is increased to 1805 per share. It says it has recently raised target for FY27 expected EV to EBITDA multiple for Bharti, and now it is reflecting for Geo2, which leads to an increase in enterprise value for Geo2, $145 billion, and now it has added rupees 65 per share as the contribution to the target price for Reliance Industries, as because of the Reliance Consumer Products recent announcement, and now it has Reliance Industries remains the top pick in the oil and gas space. And Citi has also upgraded HDFC AMC to neutral from sell, and target is increased to 28.50 per share and upgraded on
Indus Tower, Reliance and HDFC AMC. So more later. Apologies to cut you off, but markets have opened 25 points higher on the Nifty. The sensex is starting in the green, but barely so. It's actually more or less flat. Nifty Bank is unchanged. The small cap index is unchanged. The mid cap index will come up. It's 35, 40 points on a 60, 61,000 index. Nothing at all. So it's neither here nor there. Absolutely flat rates coming through. You know, some of the stocks which Sud was talking about, we'll have them up as we go down the list. Nifty heat map should come up on your screen. Nifty 50 will do a quick check and move on to individual names. Up on your screen, more down than up. Sun and Wipro on one end, Tata Motors passenger vehicle and Indigo on the other end. Surbhi.
We've turned negative. I mean, this currency headline simply cannot be ignored by the equity market either. Yesterday also we had a sizable FPI sell number and the color has turned negative for all the indices now. The Nifty, the Sensex, mid-cap index, Bank Nifty, just caution everywhere. Okay, so what's lower on the Nifty? HDFC Life, Max Healthcare, Shriram Finance, BEL. It's across the board really. I mean, it's not really too sector specific, just a wide spread of red. The upside is largely pharma and very little IT. So Dr. Reddy's and Sun Pharma are up. Dr. Reddy's, as Vinny was explaining to us earlier, that after March 26, they can go about selling semaglutide. That's when Novo Nordisk's patent expires. So that's working well for the counter. Wipro, Infosys, TCS, there's some IT buying going on. That's it. Everything else is very, very flat. The banks are at the flat line and they will have a very decisive role in how the next couple of hours shape up. So watch for SBI, watch for ICICI Bank, watch for HDFC Bank. They're absolutely flat now. We'll see the directional moves in the next few minutes. Nigel?
Well, that's right. To keep an eye on a few stocks, Spark continues its good run. Yesterday we had news that the US court has granted a summary judgment in favor of Spark, in favor of that PRV on drug CZ buy, I think so. So because of that favorable news flow that came in yesterday, it's continuing its good run. Stock up close to around 6%. Silver continues to chug along, and that's why you have the ETFs that are doing well. Nippon Silver ETF, Tata Silver ETF, both of them are higher. Jaiswal Nico, it's corrected from around 80 rupees to around 70 rupees. They put on the exchanges that they're going to be looking at refinancing. Remember, they were, doing their financing at around 18-19% approximately. But since they'll be having their meeting to, refinance close to around 1,800 crores of their debt, that's why Jaiswal Nico, one of the top gainers, more than 10 lakh shares already traded. Jamna Auto is another stock that's trading in the green. It's a good amount of, volume on that particular name. On the flip side, HCC has come in for some profit taking, and Websol Energy as well. Both of them did well yesterday. They've come in for some mild profit taking.
Okay, well, it's like a traffic light, right? Blinking red and green, the Nifty up on your screen, 6 up, 2 down. So nothing to show for, what we basically unchanged from where we left off yesterday. Angel, I think Nigel pointed out, is down 4%. Of course, the data, the monthly data coming through. Newland Laboratories is up 4%. It's got very large volumes in it. Vernova, 2% higher there. DOMS, the stationery company, 5% on DOMS. Chalet Hotels is coming up with about a 3.5% pop. KPI Green, ripped yesterday. It's up another 1.5% this morning. So that's the picture as we start in terms of the broader market, mid-caps, small caps, etc. Prateek Gupta is with us, CEO and co-head Kotak Institutional Equities. Prateek, liquid oxygen comes to mind. Is that still liquid oxygen or oxygen liquid? And does that make a difference?
Yeah, unfortunately, Prashant, we're still in a range-bound market. Basically, as you've been seeing, the earnings growth outlook is still pretty tepid for this year. At Kotak, we're projecting about barely 9%, 8.5% earnings growth for the Nifty this year. And also the foreign sentiment still remains very, very weak. That's one big factor that's keeping a lid on the markets over here. We're seeing continuous selling by the foreigners. And frankly, that's partly, we're not an AI play. The other markets are doing much better. Growth in India versus the valuations over here are not so attractive. So valuations in Nifty is still trading at about 21.5 times FY27 earnings, which is still expensive. So despite this pretty severe underperformance of India in the last 1 year, we are still trading at a 60% premium to the MSCI EM index PE. So investors are, it's okay. It's not like investors are looking at India and saying, okay, India's become cheap. We're still sort of, just about reasonable valuations, if even that. And many stocks in the markets are still somewhat expensive. So we're still sort of range bound. We have to go through probably another couple of quarters of an earnings catch up, and we'll stay in this liquid oxygen mode, I guess.
Prateek, this AI business, actually, we can go on about AI. Let me ask you the more pressing question first before we run out of time. Rupee, is that come up in conversations with clients?
Yes, of course, especially with foreign investors who are benchmarked in dollar terms. Just to put some numbers in perspective, the rupee has depreciated by almost 5% year to date. And the the Nifty's performance, if you take that as a benchmark, we are up about 10%. But 5% has been taken away by the rupee. And so in dollar terms, India has delivered only about 5% dollar terms. Now, you put that in the context of the MSCI EM index, which is up some 24, 25%. There are markets like Korea, which is up almost 70%. Brazil and Mexico are up 30-odd%. Taiwan is up very sharply, 40, 50%. Even China's done quite well. So we're really standing out, not just in terms of the absolute performance in local currency terms, but also the rupee. And the rupee is also leading investors to hold back on, any incremental investments. As it is, the crib is valuations are not particularly expensive, and is the rupee a tool which is being used by the authorities to try and stimulate the economy? So is there more downside? Can the rupee slide by another 1 or 2%? So that's sort of, there's no rush to sort of buy India. And especially as we get into the year-end sort of month as well, that's also impacting overall flows into India.
Prateek, morning. Forget buy India. I had the other question. I mean, don't call me a bear, but I'm just wondering if this becomes a new risk because of 90 and then people are calling 91. If these kind of levels happen, then anyway, you're not making returns in India. Your dollar-denominated returns diminish that much more. So my worry is this year we've seen about 1.5 billion, last count 1,45,000 crores of FPI sales this year. And the whole premise is that next year the FPIs will come. Is that premise itself at risk, or should we not be so worried, at least right now?
I think the rupee in itself will not be the main driver of whether FPIs come back or not. That would be a sort of side argument. In fact, our estimates suggest that, frankly, this week's, the last 10, 15 days, the decline in the rupee is more driven by sentiment. We had the trade deficit data that came out. The FPI selling continues, and it looks like the RBI is the one which is sort of stepped aside from supplying dollars into the market. That's what's causing the decline. I think that's lesser of a concern. We think the rupee there's not that much more downside. Current account deficit is still projected to be about 1.3%. We still have a fairly healthy forex reserves and so on. The bigger issue is, one, what's happening with the trade deal? How much longer, if at all, and also at what kind of terms will we get the trade deal? So that's the bigger issue in the minds of investors.
Yeah.
The second is the AI issue, which is anyone's guess. This thing can go on for another 6 to 9 months, in which case India will continue to underperform, and in that case, you will continue to see foreigners selling India and also, like I said, we are still not a cheap market. 21.5 times 1 year forward for 9% earnings growth this year. And yes, next year we get slightly better earnings growth, FY27. By our projections, we're estimating about 16-17% earnings growth, but still not as exciting as what's happening in some of the other markets.
Yeah.
You need a lot more growth coming back into the economy before foreigners come back.
No, absolutely no. I completely take your point, and the only reason I asked that was exactly what you said. If the currency is going to be used as an instrument to provide a cushion against the lack of a trade deal, to cushion the exporters, it's a very strategic move. Then it's no longer, a question of one speculator here or there. Then maybe it's more than that, but we don't know. I think the coming days will tell us and give us the answers. So given all of these challenges, Prateek, the question is what to do in this market. You can't be all bleak, right? Also have to find out some cheerful notes here and there. So where's the cheer?
No, unfortunately, not too many pockets. This is a time when you sort of have to protect your capital, not worry about the return on capital as much. So that's why I've been saying you're now sort of the upper end of what I call the liquid oxygen range, the range bond market we're in. So you're sort of at the upper end right now. At this stage, you'll be slightly more cautious, stick with the somewhat companies where you have greater earnings visibility, relatively more valuation comfort, companies which can withstand the slow growth patch a lot better compared to their peers. So one is sectors, and second is by size. So sector-wise, we generally still like the domestic-oriented players than the export-oriented players, whether it's the IT companies, IT services companies, or the generic global pharma exporters, or the auto ancillaries, which are heavily dependent on exports. So stay away from those, focus more on the domestic plays. And second is the relatively large caps or larger players within each industry versus the smaller players, where again, they will probably go through a tougher time in an economic slow growth period, in a slow growing economy. And the larger players would be somewhat better positioned. So again, brings us back to some of the banks, some of the NBFCs, some of the airline company. There's only one which is really worth investing, Indigo. The hotels, healthcare space, pharmaceuticals, more the domestic-oriented farmers, and so on, telecom. So that's sort of have a somewhat of a defensive tilt at the upper end of the range, is what we're saying.
All right. Hi, Prateek. Good to see you, Ben. And you've said this in the past, large private sector banks, large PSUs and NBFCs, that's something that you've liked. And, though I think you're not very positive on the tech space for the time being, I think what the street is catching on to is that the rupee weakness could in turn be good for them. And as we know, the tech index has been a big underperformer. So that's one of the indices that are actually at the high point of the day. Well, Prateek, before we let you go, just leading up to our next conversation, we have an auto name, OEM, that's going to be joining in, Bajaj Auto. But auto ancillaries is something I think that you're a little bit skittish on. How are you positioned currently on auto as well as on auto ancillary?
So autos have done very well. I think obviously helped by the GST cuts, which was a big factor for many of the auto OEMs in particular. And but most of them have already played out. In fact, we're already seeing signs of demand weakening post the initial GST bump up, and the post-festive demand is also sort of beginning to soften a bit. And keep in mind, auto demand is going to be a function of the overall consumption growth in the economy, which is still very weak. We don't have enough jobs being created, or income growth is being somewhat weak. So therefore, in that context, it's tough to be very positive on the auto stocks, especially after the rally. We frankly, at this point in time, amongst the OEMs, we like only M&M. We prefer the four-wheelers to two-wheelers. Two-wheelers, we think there is the other challenge of the EVs and more competitive intensity and so on. There are some companies which are somewhat better positioned from an export perspective, and the rupee depreciation does help. But bear in mind, it's when the overall global growth economic environment is quite weak, tough to be very bullish on the exporters, especially if those who have exposure to the US. So as far as the auto ancillaries are concerned, I think it's time to be very, very selective. There are some who have huge exposure to the US, and given the uncertainty over the trade deal, we'd be a bit cautious. So again, we would prefer the OEMs versus the auto ancillaries.
Got it. Prateek, thank you very much for joining us on AI. I started raising the question in August whether we are seeing a lot of selling because there's no AI plays here. But a lot has happened since then. DeepSeek, for example, I don't know if you saw the news, has released 2 new models recently, which they say is about 25 times cheaper than ChatGPT and as efficient. So who knows where value will finally settle in that, right? In all of that. Maybe the adopters will be the winners. And I'm actually starting to wonder if the Indian guys and not just IT companies, but banks, etc., will be the adopters of AI, will eventually reap the benefits in terms of higher margins at the expense of lower labor costs, etc. But we can have this discussion. Thank you very much for joining us. Really appreciate you being here on CNBC-TV18. Arup Rakshit is with us, Group Head, Treasury at HDFC Bank, for a quick currency perspective at one of the largest treasury desks in the country. Arup, good to have you here. Thanks very much. Your perspective in terms of what flows you're seeing, and now that 890 is gone, it's an important psychological level. What next?
Hi. So 90 is actually a psychological barrier only. I don't think that 90 has any other meaning other than the psychology which the market had played up. Yes, it went up to 90.13 if I'm not wrong, and it then came down also. What next? I think the next level would be somewhere around 92 to watch out for. It will be a scenario. See, there is a supply issue at the moment, and with the overhang of the deal not going through yet, there is a problem which is happening. So this will be there will be pressure on the rupee. It will continue. The current account deficit is also not looking in the brightest.
Arup, has the mood soured a little bit? I mean, especially after that break of, that 88.80 level, a couple of Fridays back. I mean, since then, the mood seems to have soured generally. Is that correct?
Yes, in the sense, there was that initial euphoria of a rumor that there will be the trade deal very shortly, and that was what was supporting it. But once that went out of the window, I mean, we didn't see any positive discussion happening on the trade deal front with the US. Obviously, there has been a challenges which has come in, and there is a demand which is getting fulfilled only by the weakening of the rupee. The supply is constrained.
The move, Arup, that we've seen from
RBI is trying to moderate the volatility, but beyond the point, there is a genuine issue with
But maybe they're also stepping away, right, to kind of let the currency adjust
That's what I said. See, RBI has always held the belief that the volatility should be managed and it should not be a one-way street in a too volatile condition. So they have done that. I mean, they are there in the market on and off. So it will not be that they will try to protect any level. They have never tried to protect any level, and that's been the philosophy of it. So there is that issue which is cropping up.
Arup, absolutely, which is why, like you're saying, I think that's what we've also been hearing, that whenever there has been intervention, it's been measured and limited, not very aggressive. So from here on, that's exactly the point. Do you get the sense that there is a lot of speculative element? Because there was one view that we got which suggested that the speculators could now take it all the way to 91 or make a charge towards 91. If that's the case, then would you expect more aggressive RBI intervention?
See, if there is too much speculation comes in, then obviously that has to be controlled and there will be a lot more, typically expected lot more intervention to bring it down. So the movement should be more on genuine demand supply rather than a speculation.
And what is it right now? What's your sense? I mean, I know that's a hard question. It's tough to call a market as large as the rupee, but do you get the sense that the moves right now are more speculative in nature, or this is, natural hedging perhaps that's going on?
See, if you look at the way the equity market has behaved, if you look at the fact that even the bond flows have not really picked up in that sense, so there seems to be some amount of genuine demand also, or rather, should I say, the constraint on the supply side. Supply is not really there too much at this juncture.
Okay, Arup, we'll leave it there. Thank you very much for joining us. Good speaking with you, and really appreciate it here on CNBC-TV18. We have Bajaj Auto Surabhi, and I guess, I don't know if you want to start with the currency question. Big 50% is exports.
And they're large exporters. I'm sure that would, that would be interesting and beneficial, but then there are hedges at plays as well. We also have to talk about, of course, November sales numbers largely in line with expectations. There's a question mark on the domestic two-wheeler growth, and we'll get to that as well. Three-wheelers have done really well for Bajaj Auto. We've got Mr. Rakesh Sharma, Executive Director of the company, joining in. So much to ask, Mr. Sharma. Where do I start? Okay, I'll take Prashant's cue. Let's talk about currency, because that's the hottest thing this morning, right? So for you, a company that has such a large export portfolio as well, what does all of this mean? What are your hedges like? What does it mean for Bajaj Auto, rupee at 90?
Well, good morning. It means party time. Yeah, the softly devaluing rupee is very beneficial, as you said, to a company like ours, which has got almost 50% of its revenue coming from international sources. So it's very, very helpful to being also competitive in our retail markets.
Okay, so party time as far as the currency tailwinds are concerned. But then let's talk about that domestic retail market, right? Now I have to, ask the slightly tougher question on, specifically on two-wheeler sales, because the growth has been.
Sorry.
Sorry.
Just to complete that rupee point,
how much? Sure.
Good morning, Prashant here. What's the sensitivity, if you can tell us, with say rupee, rupee depreciating, say 1%? 100 basis points. What's the sensitivity to margins, Mr. Sharma, if you have that number?
Well, on an annualized basis, every 1 rupee creates a EBITDA impact of 200 crores plus, because our exports are over $2 billion. So, like I said, 50% of it coming from all international means there is a very good level of sensitivity.
So these are straightforward translation gains. So that's 200 crores on one rupee move, 1% move.
Yeah, in general. But of course, we have hedges in place because it's always more important to achieve certainty. We are not sort of gambling on the dollar rupee, because we have always felt that it's more important for us to maintain retail price certainty in our destination markets. And that's why we have approach which is biased towards hedging and towards achieving certainty.
Yes, and so
all of it cannot be grabbed. But this whole the trajectory of the rupee has been such that one has let it be and sort of ride along with how the rupee's trajectory is unfolding. So therefore, a lot of that devaluation benefit is accruing to us.
Just to close the loop on this, sir, from when on does it start benefiting you? Because you'll have some hedges in place, right? So do you start seeing this benefit from January, 1 month down the line, 15 days? I mean, if you could give us a timeline, with what sort of a lag? It's packed, spot rate is what you go with. In the next 5 days or so, you start gaining from this rupee depreciation.
No, it's not like that. The thing is that you always hedge a certain percentage of your thing. So it is immediately, whatever spot we are achieving right now for our unhedged portion is accruing to us. And that is...
What is your hedged portion then, sir, on your export?
I would not sort of venture forward that number, but we are hedged for almost, with certain percentages, for almost 12 months down the line, So, but...
the entire $2 billion, just trying to get a sense. But you also said that most of this depreciation benefits accrue. So...
yeah.
But then the hedges should eat into some of those benefits, right? The translation gains.
So, let me just clarify. Because there have been multiple questions, and just if you can listen. Like I said, our approach is towards certainty. The trajectory of the Indian rupee's movement opposite the dollar has been, softening. So obviously, recognizing that, you roll back the amount of hedging which you do. And therefore, the amount which is hedged is much less, let's say, than what we would have done 2 years ago, when there was a little bit of an up and down. And therefore, what happens is that most of the devaluation through the spot achievement is getting accrued.
Yeah, absolutely. I mean, sounds absolutely rational, because the trajectory of the currency in the last many years has been gentle depreciation. Very rarely do we see instances of sharp appreciation, which would make you want to hold very large hedges. So that explains that number of 200 crores positive EBITDA impact every time the rupee falls by 1 rupee, that is, against the dollar. Got it, sir. So that's helpful explanation. Now coming to the bread and butter business, which is auto sales and what's really going on in the domestic market. So starting with two-wheelers, now, it seems slightly tepid compared to how the industry is doing. And Sudarshan was telling us, even if we, leave aside the anomalies, festive up and down, April to, November, the sales are down, I think about 5%. So what's really going on with the two-wheeler space, sir?
Well, if you're asking me about the industry, I am not at all surprised about the November outcomes, because, Diwali has a very big impact. And last year, Diwali was in November. And therefore, comparing equivalent to equivalent is a better method. And actually, the right way now, once the dust has actually settled, is to look at September, October, and November to really understand which way the industry is headed. Because September was an up and down month, with the GST being announced very early on and then implemented from 22nd, and October was full festive, and November was only first week festive, and then after that was post-festive. So when we put September, October, November together, there is certainly a very good impact we are noticing of GST. It's made at least I would say 6 to 8 percentage point difference, not only in two-wheelers, but I would say also in three-wheelers. In fact, a much better impact on three-wheelers. That's why you're seeing really handsome numbers coming out from our side, because being 75% market share, a lot of that uptick is disproportionately captured in our favor. So certainly, if you look at September, October, November, from a -1% which the motorcycle industry was delivering, it has gone into, swung to 6-7 percentage positive.
Absolutely. I mean, the question was only because in November, other automakers, two-wheeler makers, have managed to show some growth, while obviously everybody deals with that base issue of which month Diwali actually fell in. Anyway, going forward, when we look at December, turn of the calendar year, look at January onwards, what is your estimation for domestic two-wheeler sales for Bajaj Auto?
I would say December is going to be again tepid, but again, we are not worried about that. It'll be better than last December, but December is always a low month with very few degrees of freedom. But we are optimistic about January, February, March, that quarter, because what is happening is that not only has growth returned to the industry, but the better segments are doing far better. And within those, where we have captured the growth is on our higher variants. Our growth has been completely driven by the higher variants. Yes, we have in the 100cc segment lost share, but there has been a bit of a reversal in our trajectory for the last 3-4 months. As you know, our market shares were slightly going soft. I'm talking about 1 to 2 percentage points. And that recovery got a real boost with this GST cut, because we found that the customer behavior has sort of turned towards our kind of play, which is, try and get the customer through better products and higher variants, rich in features, etc. Now that is getting more and more traction, and that is the basis on which the last 3 months we have seen a clawing back of market share and improvement, particularly in the 125cc plus.
Yeah, can you share exactly that number, the latest numbers as of end November, market share in the 125cc plus, which is what you target?
So we are these are estimates because you don't get precise numbers. These are our estimates which are calculated. The absolute is not as important. What is important is the trending. And our estimate, for your information, is about 23% is our market share, which had slipped down to 21%. And that has come back to about 23% as of November in the 125cc plus segment.
All right, Mr. Sharma, thanks very much for joining us, sir. Good luck. And I am the rupee, I am the business as well as we go forward. Thank you. 88, 90 points lower, which basically means that we are almost at the day's lowest level. Are we at the low? Okay, there's a small bit of rebound. The low has been made today at 25,921.
Bang on the 20-day.
Which is the 20-day moving average. So we were about 70, 80 points away from it as of yesterday's close. The 20-day basically moved to about 25,924 as of yesterday's close. So at the low point, you broke that by about 3 points and you're kind of sort of sitting on it now as we speak. The Nifty Bank, maybe just quickly to take a look at this as well. We made a low of 59,062. And here, it's the 20 days at about 58,775 as of yesterday's close. We take a break. Blue Star Management on the other side to talk about the outlook for H2 and beyond. Stay tuned. Coming up.
Welcome back. Markets, at least for now, have defended that mark, the 20 DMA, and seeing a bit of a mild bounce from there. And the rupee as well has stabilized a little bit, which is good news. Well, let's focus on another company, Blue Star. And we have Mr. Tyagarajan, who is here with us on the show. Hi, sir. Good morning. Good to see you, Ben. Well, sir, coming across to you in just a bit, we want to understand whether or not the long-term growth story is intact after a weak summer, the festive growth as well as demand trends in this quarter, and the room AC industry outlook for FY26. We're going to discuss all of this. Mr. Tyagarajan, good morning. Good to see you in. Always a pleasure talking to you, sir. Well, for the industry on the whole, Q2 was tough for a whole host of issues. Could you tell us how things are looking in the second half of this year? And will you be able to make up for the lost ground in the first half of the year? And also in our last conversation, you mentioned that they're expecting 30% growth this festive season. Did it happen? And, what's your rough estimate as of now?
Good morning, Nigel. It's a pleasure interacting with you. All are pertinent questions. First thing is that in the festival season up to Diwali, from September 22nd, when the GST came into effect, we saw in Blue Star around 35% growth for the like-to-like period, but that's not going to convey anything for the simple reason there would have been a pent-up demand during the blackout period when the GST new rate had not come into effect. Now, there is an energy label change that is going to be implemented with effect from 1st of January 2026. Therefore, build up to that, there should be some sales that should be happening coinciding with the Christmas New Year season. Going by November last few days indication, I think there will be growth. After a long time, November was a month where we saw around 10% growth. Now you have to wait for the energy label implementation period, which is the December 31st. I think it will take off from that particular point. Then you have the other window, February, when the IMD forecasts are available, build up to the summer. Now, on the whole, my estimate is that the industry should be happy if they match last year volumes and revenue. It is going to be anywhere between minus 10% to same level or a flat for FY26 as far as room air conditioner sales is concerned. Now, we are at around minus 10% as of now. We will be very happy if you show a marginal growth over last year. But having said that, even if it is going to be flat, CAGR, if you calculate from FY22, it is still 18% because we are comparing with a huge growth year, which was FY25.
Okay.
That's why we are feeling the pain. Okay. I do not think we will be able to make up for the last summer season.
Okay. All right. But you're sounding far more optimistic in terms of demand. Give us a sense about inventory levels, sir, if you could give us a sense on that. And what about discounting? Is that taking center stage now to push through inventory, or that's not happening? Give us some clarity on both inventory as well as discounting.
Our inventory is around 65 days. Ideally, it should be around only 45 days.
Okay.
And hopefully by December end, it comes down to 45-day level. What I gather is the industry inventory is around 90 days. And obviously, it will lead to discounting. There are two aspects to it. One is inventory level has to be brought down. Then a manufacturer cannot bill the channels beyond 31st of December, the old energy label products. So you have components as well as finished goods, which you will have to liquidate or you have to relabel. So therefore, there will be margin pressure, but that was anticipated, that is being taken care of. It is not going to impact the revised guideline on margins, which I had provided. You know, it was 7.5 to 8%. We revised it down to 7 to 7.5% for the full financial year. So that takes into account this margin pressure, which is inevitable.
So you're sticking to 7 to 7.5% margins
for the segment 2
for the unitary cooling products.
That's right. That's right.
Got that, Mr. Tyagarajan. It's been a challenging year, sir, right? Bit of a washout year, forgettable year for the room air conditioner industry. But my question is a little deeper. I mean, is this just one of those years, and they happen in businesses? It's a weather-related industry anyway. Or does it give you learnings in terms of whether something needs to change? I mean, do you think that there's a greater need on the industrial cooling business, the commercial cooling business? And give us your expectations from that business for the rest of the year.
Shurbi, good morning. It is not disheartening. It is disappointing. That's about all. If you're, you're a hero acting in many movies. One movie is a flop movie, and so you hope the next movie you work hard to make that movie a successful one. You will not retire because of that, and so therefore.
But sir, to take the analogy forward, it's like if one of your Bollywood movies flops, that's fine. It's life. but you realize that you need to grow bigger in the southern markets, and you need to do a lot of the South movies as well. Therefore, the question on commercial air conditioning.
No, the potential for this industry is great. This is the industry which amongst consumer durables will be growing the fastest. We are fortunate to be in this space during this period. So between now and 2030, there may be one more bad summer, that's fine, but it is going to be a very important segment for Blue Star and for anybody for that matter. That's why the competition is intensifying, the valuations are high, and I am very, very optimistic about the long-term prospects. Even FY27 should be a great year. Now, coming to the specific question, the long term, what one will have to do, the lessons learned. We keep learning here, despite being 82-year plus company. You have to weather-proof Blue Star. You have to weather-proof the room air conditioner industry itself, which would mean we do have portfolio in commercial air conditioning or commercial refrigeration. You must do that. Even within room air conditioner, the institutional business you should grow. And you should have the cost structure in such a manner you are flexible. Say, for example, we end up spending a huge amount of money in the IPL, assuming that summer season is going to be great. But after having invested that money, if summer is not working, that money is a waste. So you will have to relook at your marketing mix as well. So there are quite a few lessons learned and that will get implemented. But having said that, this business is seasonal.
No, absolutely.
And you can't escape from that.
And you expect a much better FY27. Point taken, sir.
Mr. Tyagarajan, good morning. And we have you on when the so-called Mumbai winter is returned. It got hot in the middle, but I think it's much cooler now. And it's expected to be a cold winter, according to the weather folks. This one particularly, both here and in North India as well. Is there any way to define, because you're on the industrial side, on MEP, you're in data centers, factories, etc. Is there a way you can define market share there?
No, on the commercial air conditioning, we will be close to 30% market share. Or EPC projects addressed segments, we will be close to 30%. But the size of those segments are not going to compensate for the room air conditioners. In India, room air conditioners constitute a very large part of air conditioning market. So for you to grow not only the revenue as well as the profits, the room air conditioner part of it becomes very significant. The commercial air conditioning part of it or the EPC is providing you that relief. That's why you will find our results are not all that bad compared with some of the peers, for the simple reason that B2B part of it is compensating for.
Okay, all right. Mr. Tyagarajan, I just want to ask you this with regard to air purifiers. That segment suddenly seems to be coming to life. And I believe, the demand is very, very high. And we had Eureka Forbes that put out a presentation. If I got my numbers correct, they were talking about less than 300 crores of an industry capacity as of now, which they're expecting to go to more than 1,000 crores. And I think they're up their guidance. What about you? Do you all have plans to get into this vertical?
Your own article is also well articulated. You have...
my piece on LinkedIn. All right, yeah. Go ahead, sir.
So it should, but the thing is, whether 300 to 1,000 crore, whether the markets are going to take it seriously. It's for this country, this is a very, very still a small part of it.
Under-penetrated. I think it's less than 1%, if I got that number correct.
In the long run, my view is the air conditioners should be equipped with more and more filters for purification, so that you don't need an air conditioner, air purifier. That's what you have to look at.
Okay. All right. Mr. Tyagarajan, we'll leave it there, sir. Thank you very much for joining us and running us through state of affairs right now and what the future looks like. Of course, I mean, The room AC market is of course, the dominant big one, which in 27 and 28 perhaps looks much better. Now, we want to shift focus and shift gears to the auto space. Maruti Suzuki has made an entry into the electric mobility with two announcements. My colleague Shivani spoke with Partho Banerjee on the company's preparedness for EV transition and more. Listen into some of that conversation.
With regard to this new EV segment, what the research, it has clearly come out, there are 4 key concerns. One is the range of the product. So in past, many of the OEMs who have launched the product, finally the customer were not getting in line with the expectations which was committed by the OEMs. So we showcased today that in the Bharat Mobility Show, we assured that our vehicle will be going a range of 500 kilometers. And today, we are very happy to announce that the ARI has already given us a certificate that our vehicle is having a range of 543 kilometers.
You have said that around 1 lakh odd charging stations across the country. Give us a sense of, from Delhi onwards, around Delhi, if somebody has to.
Yeah. In the top 100 cities, on average, between 5 to 10 kilometers, we are going to have our chargers. And if en route you are moving, I need to just give an example that I give an example of Delhi to Chandigarh today because it doesn't need any charger for our product.
And so these 1 lakh charging stations, what is the timeline for them to, be up and running?
We have given, our vision is by 2030 we will be able to do that.
All right, that's Maruti's big EV plan. Well, let's move on to another exclusive conversation. Mangalam caught up with Asian Paints MD and CEO Amit Singhal, where he says that the company can expect 50,000 crore rupees in revenue over the next 4 years and is very confident of growth. Listen in.
Even now, while you are seeing some shoots in terms of the demand, we are not seeing that there is belligerence, there is full exhilaration coming into the market to that extent. We feel that today the rural markets are just coming back, even the urban centers are just trying to show some spark. I feel that possibly it will take some time before we really get on to the parameter of really double digits and so on and so forth.
How long will it take?
It's very difficult to say, but I would say that possibly another 2 quarters is something we need to kind of watch out for sure in terms of what we are looking at. So therefore, right now, I think the whole peg is in terms of saying that we continue to grow higher than the market, and that's the pitch in terms of what we would take.
And you haven't been doing so for the last few quarters, and now you're confident of doing that, right?
The first 2 quarters of this year, we have grown higher than the market to that extent. And as you look at the H1, we have grown much higher than the market overall.
So you will continue to gain market
That's
share?
absolutely.
50,000 crore revenue on Asian Paints, by when?
Okay, definitely for the next 4 years.
In the next 4 years. Amit Singhal stays in Asian Paints for the next 5-6 years at least?
I think from my mindset, eternally.
One piece of advice that you would like to give some of your competitors?
The advice is that when you kind of operate in the market, okay, operate with a certain value, a certain ethic, and look at possibly differentiating yourselves far more strongly rather than being me too in terms of the market.
And to the investors, what will you say, who've been sitting on 2 years of losses?
I think the investors will see that this is a brand which they will have to watch out for because there are lots of things which are coming, and we think that possibly we have our clear eyes on the stakeholders and we will give them a good return.
All right, let's get back to the market then and get some trades in. It's 10 o'clock and the market is in a bit of a slippery mode. 90 points lower on the Nifty and we are below 26,000 now. Vinay Rajani is with us. Vinay, this is a dip. Would you buy it? Or would you short at these levels or would you do nothing on the index?
Yeah, good morning. So the problem with the market is the broader markets are not participating. If you were to look at the breadth of the market, percent of stocks above their 20 DMA and 50 DMA are below 40% in NSE 500. That clearly shows that participants, the overall participation is not there. Only Nifty stocks have been moving up and rising because of the global market strength. And since we have been falling for last 4 trading session, Nifty is gradually losing strength. Today, Nifty has broken down below its 20 days moving average support, which was placed down 25,964. So gradually it is losing the strength. The only support I can see for the Nifty is the 26th November low, which was at 25,842. If Nifty breaks that level, then definitely the short-term trend will change to bearish from bullish. So that is the only support I see, and below that Nifty can extend its fall. And broader markets are already not participating. That's a weak sign, we can say. So better to remain cautious in this kind of environment. Very few stocks are supporting the index. Otherwise, broader markets are looking very weak on the chart. So we have to be cautious. Should approach the conservative strategy rather than being aggressive.
Okay, and any stocks, Vinay?
Yeah, so capital market theme has been losing strength, and we have seen that many stocks in this particular segment is looking weak on the chart. So one can go short in the CDSL December future around 1571. I would recommend a stop loss at 1600 on the downside. I'm expecting a target of 1525. The second stock I like is on the long side is the Hindustan Zinc. So Hindustan Zinc has been one of the resilient stock, and overall metal theme is looking strong on the charts, and Hindustan Zinc is on the verge of giving fresh breakout. So considering that, one can go long around 500 in Hindustan Zinc. 490 should be the trading stop loss. On the upside, I'm expecting a target of 520.
Yeah, no, absolutely. Well, Vinay, good to get that view. We'll take a break. Manisha on the other side, commodities in focus. Okay, well, equities, of course, under pressure. Now 130 points lower. Started with about we were down about 60, 70 points, half hour back. It's now double that in terms of losses. And we are under the 20-day moving average as of yesterday's, the 20-day as of yesterday's close. We are under that level. Manisha is here with what's moving in commodities. Manisha, over to you.
Well, thank you for that, Prashant. I'm looking at rubber prices because a major price movement overnight has come in for this one. We've seen a decline of 4% overnight. And when you look at this year, it's down by 13%. And this is even as we're looking at a deficit in the global markets. Let me take you through numbers there. We did see a 7-month highs in this year itself, but since then the prices have been on a decline there. When you look at the, global rubber market there, and as you can see, the last 4 years, you haven't seen the production in the global markets gain much. So from 14 to 15 million tons of production is what we haven't been able to achieve. But then you look at the consumption numbers, and they clearly have been rising every single year. 2025, by the way, is the 5th year of deficit when it comes to rubber production and consumption numbers therein. So that, in turn, should have been supportive for the prices. But that's exactly what we have not seen. Also, when you look at the natural and the synthetic rubber market, well, when you look at that categorization, the synthetic rubber market is higher than the natural rubber market. One, because there's not such availability. And second, because synthetic rubber is more affordable. So when you look at the market dynamics, 52% of market in rubber is synthetic and 48% is natural at right now. Talk about the Indian markets then, and here as well, it's quite a dismal way when you look at the price movements itself. The input costs, remember, have been rising, but it is the cheaper import of rubber that we continue to see within the country. So this is the prices. All-time highs, what we saw in 2011 at 243 rupees a kg. That was broken last year in August 2024 when the rubber prices hit a high of 247 rupees a kg. Fast forward it to today, and you have the rubber prices trading lower than what they were in 2011 at around 185 rupees a kg. As I said, 40% of India's rubber requirements are imported, and this is cheap rubber coming into the markets there. And another thing that the industry has been asking for is an import duty, anywhere to the tune of 5 to 25%, because the way the rubber prices have been in the last many years, they actually have seen a decline of 25% in last 10 years. So not a great time to be a rubber producer, clearly.
Okay, all right. Thank you very much, Manisha, for the dynamics of the rubber industry and what's happening with the rubber markets right now. We'll take a very quick break on that note. Coming up on the other side, our special segment, The Economy. Today, Lata discusses how the falling rupee and the soaring GDP can impact RBI's policy decision. Lakshmanan Navi of Federal Bank and former MPC member Ashma Goel will be with her.